ought to be 10,000 private startups that are using Bitcoin, and there ought to be thousands of public companies using Bitcoin. And the fact that you bought the stock, you know, at the all-time high and it traded down is the same, you know, it's the same disappointment of the people that forgot that Bitcoin traded an all-time high 95 days ago. It's like, Jesus. It's like, you know, you call yourself an investor. If you haven't struggled for 4 years, you're not even, you know, a casual investor. You're just a speculator or a trader, right? Mm-hmm. You know, and if you're really building, if you're a business person, if you're an industrialist, you ought to sign up for a decade, 10 years. And, you know, and if you've been doing something for 10 years and you haven't succeeded after 10 years, it's reasonable to say, maybe I don't have it, mm-hmm. or maybe this was not the right idea. But for these companies, you ought to give them a 10-year runway. And so instead of saying, well, I notice right now that all they've done is like issue some equity or issue some debt instruments to buy Bitcoin, that doesn't mean that they won't become the greatest insurance company in the UK or the greatest bank or the greatest credit issuer.
Yeah, that's totally fair. You said a little earlier that you would never be interested, or you likely wouldn't be interested in becoming a bank. Like, that is something that a lot of people have speculated about strategy.
We wouldn't.
You wouldn't do that. Why not?
Yeah, because we have a business which in theory is almost infinitely scalable. Mm-hmm. If you look at the existing business, we have a product, STRC, Stretch, digital credit. Okay, what's the perfect product? A product that pays you a 10% dividend with a vol of 1 or 2 that's publicly traded. What's the market size for that? $10 trillion? Right, there's $100 trillion easy, you know, addressable market for that. If we were 10% of that treasury credit market, it would be $10 trillion. So I have a product which has got a total addressable market of $10 trillion. Okay, who wants it? Everybody wants it.
Yeah.
Who wants a bank account that pays? By the way, what if it got to zero vol? We actually think that our business idea is simple. Bitcoin is digital capital. Stretch is digital credit. If you create something on top of it that strips it to zero vol, it's digital money. A bank account that pays you 8%. You know, people are trying that right now. There's a number of people that are trying to create digital money.
Is that essentially like a Bitcoin-backed stablecoin at that point?
Yeah. Mm-hmm. Yeah, so I create a stable coin. Let's say I strip the vol to zero, and it's just that you put in $19,000.22, and you get out $19,000.22, and while you're waiting, you collect 8%. Mm-hmm. Okay, a bank account that pays 8%. What's every other bank account pay? 3.5% right now in the US dollars, 50 basis points in yen, 100 basis points in euros, or mm-hmm. 150 at best. Okay, so a bank account that pays 8% backed by digital credit, how do you create it? You blend in a mixture of credit and currency. By the way, you can crank the leverage down to 80% and you pay 8%, or you can crank the leverage up to 1.5 and pay 15%. Slightly more risk at 1.5 than it is at 8, but mm-hmm. people will do both. They'll crank the leverage up and they'll crank it down. Okay, what's digital money? Digital money is zero vol with a yield in excess of the risk-free rate. Who wants it? Everybody wants it.
Everyone.
How big's the market? 200. If you had a bank in the UAE that paid 8% on bank deposits, might you get $10 trillion? Okay, you could charge 100 basis points, Danny. Charge 100 basis points on $10 trillion. That's $100 billion a year. Mm-hmm. Okay, the entire gross national product of Abu Dhabi is $330 billion.
And in that case, every rich person in the world is going to be sending their money there.
Which is the perfect nation state strategy, mm-hmm. the perfect business strategy, the perfect banking strategy, the perfect product strategy. Okay, if you're UAE, what do you want? Do you want all the people in the world or just their money? Okay. I'll give you a choice. You can have all the people in the world. No, I don't want 1 billion people. You can have all the rich people in the world. Oh, now I have 20 million people here. Or you can just have all the money of the rich people in the world. I just want their money. Okay? How do you do it? Just take a bank, offer a digital money account, pay 8%, keep 100 basis points, buy digital credit, blend it with some currency equivalents. Maybe you put on a volatility buffer. Maybe you don't need a volatility buffer. Okay, now you make 100 basis points. You slurp up 10 trillion. Now you've increased your gross national product by 30%. Slurp up 30%, double the GDP. Okay, I double the GDP. How many people does it take? Oh, 100. Okay, 100 people making 100 billion a year. Okay, I give you an idea to make $1 billion a person a year. You have a better idea for me? I don't have a better idea.
Absolutely not.
Okay, so now we're back to the question of why don't I do something else? Okay, because I'm giving you the ideal product. Digital credit is the feedstock to the entire, the entire banking system. In fact, if you create digital money, not only do you take all the bank deposits, you take all the treasury credit, you take all the repos, you take all the short-dated instruments, but if you look at everyone that bought junk bonds, corporate bonds, mortgage-backed securities, 5-year bonds, 10-year bonds, sovereign debt, municipal bonds, why did they not just put their money in a money market? The answer is they were reaching for yield or a tax advantage, right? How big is that? $300 trillion, maybe more. Okay, how much of that capital would simply go to a bank account that paid, by the way, all that capital blended in dollars yields 5%. All of it. And what do? You take on duration risk and you take on credit risk to get to 5%. If you don't want that, you're ripped back to 3% or 2% or whatever the number is. So I offer a bank and I offer you 7%. How much of the 300 trillion would go to that? No duration risk, no credit risk.
All of it.
All of it. All of it. Okay. Now here's the issue. How do you create digital money? Well, to create digital money, you need to take digital credit, blend it with a little bit of currency so you have a liquidity buffer, maybe put on a reserve on top of it for a volatility buffer. Then you need to get a regulatory stamp of approval, right? You need a banking regulator to say you can offer the account, or you need a securities regulator to say, okay, you can offer this as an ETF. Or you can offer or you can offer this as a private fund, or you need a digital assets regulator to say you can offer this as a digital stablecoin. Okay. So you put the regulatory stamp on it, you put the buffer on it, you do some active management for redemption. People want daily redemptions and they want it to hold stable NAV. And so we can't necessarily do that. Like, I can't give you a regulated bank account in the UAE because, Mike, are you going to start a bank in the UAE? No. Like I can't. Why would I do that, right? They can do that. Am I going to start a bank to compete with Morgan Stanley? Well, I think like in 1860, right? Morgan Stanley got started. They were financing the Civil War, okay? Right? And so the point is, why do I want to compete with JP Morgan or Morgan Stanley? I don't want to. I don't want to compete with Fab or Emirates Bank or Barclays Bank. I don't need to.
Yeah.
Right? Because if you want to create digital money, you need digital credit, STRC. Okay? How many banks are there in the world?
Thousands.
Tens of thousands. There's 5,000 banks in the US. Must be tens of thousands of banks. So there's no shortage of banks with sales forces and good relationships with regulators, right? There's a bank in Japan that gets along well with, the Japanese regulators. Do I want to go to Japan and start the world's biggest bank in Japan? Of course not. Do I want to start the world's biggest bank in Germany? Of course not. Do I want to be Deutsche Bank? Do I want to be, the biggest bank in Switzerland? Of course not. So there's no point in competing with the banking business. The idea is digital money. high-powered money. High-powered money based on Bitcoin. That's the idea, not my idea, right? I mean, it popped up many years ago in the Bitcoin community. So if you want to create high-powered money, you need to strip the vol and you need to integrate it into the currency system of the world. And so I think it's a simple three-step process. You start with digital capital, you layer on digital credit, and then a third party, a bank or a money manager, actively manages it and then puts the regulatory approval on it and then markets it and brands it to create digital money. Vanguard can create it, BlackRock can create it, Emirates Bank can create it, Deutsche Bank can create it, Morgan Stanley can create it, JP Morgan can create it. Do you not agree with me that those are all much better brands with much better distribution, with much better platforms than my company?
Yeah.
Right. So a successful business strategy is not compete with everybody and be intentionally, obnoxious. Like, we don't need to topple the United States government. We don't need to topple the banking system. We don't need to topple the dollar. We don't need to topple the credit market. We don't need to topple the commercial banks, the investment banks. We don't need to replace any of them. What we need to do is figure out how to make them successful and make them the best version of themselves, right? So in this particular case, you take STRC, you take a digital credit instrument, and you offer it as the universal, financial sweetener, right? As the feedstock. It's diesel or kerosene. It's like I show up in Saudi Arabia and I got gasoline. What I don't have is service stations and auto dealerships and highways and auto manufacturers and driver's education schools and police force and garages. And do I want to create all that? No. I just literally want to sell tankers worth of gasoline, and I want some local business. It's like, if I should happen to find someone that already has all that stuff,
why build it?
I would like to say, well, here, I'm going to give you something 10 times better than what you're currently running your industry on, and then you get to get rich.
I mean, that sounds like a good deal. Is this
now here's the most important question. If I offer you a digital credit instrument that pays you, say, right now it's 11% dividend tax deferred, but let's say it's 10% to make the math easy. I give you 10% dividend income on a digital credit instrument. How much do you want to buy? It's like infinite. Okay, what's the market for that? The market for that literally is 10, 20, 30 trillion dollars. Okay, then the question is, why wouldn't you buy it? What's keeping you from buying that? Like, if I'm going to give you something which is 10% yielding, and you can build any bank account or any money market fund, private or public, or any stable coin or anything on top of it, okay? And if the market right now is $300 trillion of credit offering 5%, and we're offering 10%. By the way, it's 10% tax deferred, so it's really 15% blended. So if we have something which is 3 times better than the rest of the world, why wouldn't you buy it? Tell me.
I mean, I don't know why you won't buy it. I guess the only reason someone maybe won't buy it is if they didn't trust the sort of Bitcoin-backed side of it. Okay,
well, we can rifle through them. Okay. I wouldn't buy it because I think Bitcoin's going to zero tomorrow. I don't trust Bitcoin. Then I don't buy it because I don't trust the credit of the issuer. For example, I want to sell you $10 billion of this instrument, but I've only got $1 billion of Bitcoin to back it. You see?
Yeah.
If the issuer isn't creditworthy, I wouldn't buy it. And then the third reason I wouldn't buy it is because I think the management team is distracted by other things. And that's a very long-winded answer to your question, why wouldn't I want to be a bank? And the fourth reason I wouldn't buy it is because the person that's offering it to me wants to compete with me.
The answer to the question is because you don't want to get distracted. You want to focus on what you're doing right now.
Laser focus. Like, if you've created the world's greatest product, And if you have a vision for a digital transformation of the monetary system of the world and the banking system of the world and the credit markets of the world, if that vision is digital credit built on digital capital, then why wouldn't you focus on that? Mm-hmm. Everything else is a dilutive distraction, right? Right, like you have the world's greatest product. You can either sell $1 trillion of it, or you can go find the next thing. You understand that your odds of actually succeeding at the first thing go down exponentially if you come up with a second idea. Mm. When you split to 3, 4 ideas, your odds of succeeding fall exponentially, and so it's not a good idea to get distracted. It's also, by the way, it's not a good idea to compete with your customer. If I'm actually knocking on the door of JP Morgan and First Bank of Abu Dhabi and Emirates Bank and Morgan Stanley and Citi and Bank of America and BlackRock and Vanguard, and I'm offering them digital money, it's like let's talk about sales, Danny. You're a salesperson, and you show up to the customer. Here's your 2 pitches. I've got the best company in the world. We're the smartest, and you should buy our stock and bet on us because we're smart. That's a pitch. Mm-hmm. Or, I've got the best product in the world. You can buy this product. It will cut your cost to 0, and it'll delight you, and it'll be very enjoyable. It's like the iPhone. It's a consumer product. That's a pitch. Mm-hmm. Or, I have an industrial product. If you buy this, you can create robots and be the most valuable company in the world yourself. I'm going to give you a chip, and you will become the most valuable company in the world. I have unlimited free thermonuclear reactor in a pocket, and you can put it into your cars, and you can create flying hover cars, and you can become the greatest company on earth with the greatest product on earth, and I'll be your vendor. Or even better, I have a product, you can put it into your bank will be the biggest bank in the world, and your country will be the richest country in the world, and your country and your children's will be rich forever, and you'll be the most powerful company, the most powerful country with the most prosperous people, and you'll create the greatest company because you'll have the greatest product in the world, and I'm just going to be your humble supplier. Which of the 3 sales pitches do you think is the most powerful sales pitch?
Easy decision.
Yeah, you see? Mm-hmm. And this is the point of Bitcoin, which is I don't show up and say, guess what? I invented something smarter than what you have, and you're stupid and I'm smart, and we're going to crush you to death because you're stupid and we're better, right? Don't show up with that pitch. Or you have this business, you have a bank, but it's a 20th century bank and it's going to 0. So what you ought to do is just sell your stock in that bank and buy the stock in my digital bank, which is 21st century. There's no reason to be confrontational and negative. Why don't you be inclusive and aspirational? Let everyone else win with you. Right? And that's my view with Bitcoin all the way forward. Bitcoin is for everybody. Everybody is better with Bitcoin. The government, the corporation, people richer than you, people more powerful than you, people more famous than you, right? People that have politics you disagree with, they can all embrace Bitcoin and they will all benefit from it, and you will benefit from it, right? That's at the base layer. That's digital capital. With digital credit, we're creating digital credit. Am I worried that someone else might copy it? No, because if 100 companies copy it and they also issue digital credit, that will accelerate the transformation of the credit markets, and we all win together, right? They're actually helping. We're helping each other. That's a good thing too. Embrace that. And then when you go to see the customer, right, the small idea is we have a great product. You should buy our equity. The bigger idea is we have a great product. You should buy the product to make your life better. But the greatest idea is we have a digital credit product. You can actually build it into your financial product, build it into your bank, build it into your future, and you can have the greatest product in the world, and you can be the greatest company in the world, and you can be the most powerful nation in the world. Empower others, right? Empower others by allowing them to be part of your future. And you can see, if you want Bitcoin, right, what is hyper-bitcoinization? Hyper-bitcoinization is not all the governments and the banks and the corporations all go away.
Yes, they all have Bitcoin.
Like next time you sit in a dentist chair and you look up and imagine all the governments and all the corporations went away, and then imagine the guy that manufactures the Novocaine and the drill bit, and the x-ray machine also went away. And then think about how they deal with your toothache. The point is, the future is not corporations and governments go away and banks go away. The future is not currencies like the dollar go away. The future is we embrace Bitcoin as digital capital. We rebuild the entire economy with that as the base layer. Then we create products on top of it, whether it's digital insurance or digital credit or digital banking or digital derivatives. And I am not the expert in digital banking, digital derivatives, or digital insurance, nor am I going to purport to be. I'm just going to focus on digital credit. And I'm not even the expert in digital credit because there's 100 flavors of digital credit. I'm just going to focus upon the digital credit that we focused on and digital treasury credit. And what I would say is that if you actually take that credit and then you synchronize it with the dollar and the yen and the euro and the real and the pound, you synchronize the digital credit with the currency systems of the world, and you're synchronizing it with the $300 trillion credit market, then that becomes the base layer for a new type of digital money. And high-powered money is the yen yielding 6%, the pound yielding 8%, the dollar yielding 8%, the euro yielding whatever it yields. Whatever the currency frame of reference is, wherever your liabilities are, I'm going to give you that with no currency risk, but with a risk-free rate, ideally which exceeds the inflation rate of that currency, right? Mm-hmm. Right? If the dollar's expanding at 8% and I can give you digital money that yields 8% tax deferred, then I just gave you a completely stable instrument that lets you keep up with inflation. And then you don't got to complain that you bought Bitcoin at the all-time high 94 days ago and now it's traded down, or you bought whatever stock, some Bitcoin treasury company 3 months ago and it traded down. It's like, the truth is, when you buy Bitcoin, you're a capital investor. You got to have a 4-year time horizon. When you buy equity, you're an equity investor. You got to have a 4-year time horizon, and you take equity risk, right? It's like, if you don't want to take risk and you don't want to take duration, you don't want credit risk, you don't want duration risk, you don't want equity risk, you want money. Mm-hmm. Who do you want it from? You want it from a too big to fail bank. So what is the future? Right? The brilliant future is the 200 biggest banks in the world offer digital money accounts that pay double what traditional money markets pay, and 10 or 20% of the money in the world flows into those bank accounts, maybe 30, maybe 40, maybe 50. Remember what I said, though? It took 30 years for 75% of the people to agree that electricity made sense. How long did it take any rational thinker? 30 seconds. Takes 30 seconds for a rational thinker to figure out what it took the world 30 years to 75% agree on. So if we create digital credit and we wire it, and then we create digital money and then we wire it into the banking system of the world, you're going to have delivered a product which is 3 times better, or depending on how you how valuable is it for you to collect $120,000 a year instead of $40,000 a year? Is that 3 times better, or is that infinitely better?
Yeah.
Might be infinitely better, right? So we'll create that. It'll take amount of time. And what's the risk factor? The risk factor is distraction of the management team. It's ego. right? It's always ego, Danny. It's you have something good, and your ego tells you got to make it better, right? It's like, if you want to segue into the controversy du jour right now, it's like Bitcoin will fail if it doesn't have larger block sizes. That was the controversy. Then Bitcoin will fail, and that gave us the block size word. Bitcoin will fail unless it has more functionality, and that gave us Taproot. Bitcoin will fail if it doesn't use less energy, and that gave us the ESG, wars. Bitcoin will fail if 1 billion people can't self-custody, and all of a sudden you need 100-bit proposals to scale that up. Bitcoin will fail if it doesn't have smart contracts, and you need that. Bitcoin will fail unless we're quantum resistant right now. And it's all of this alarmism and it's ego. People have these ideas and they want to be very important, and so they want to represent their ego, and they want to drive dilutive distractions in 100 ways. And I would say that's how empires fail. Why is California struggling? Because you get so rich and so successful that you feel like you can do whatever you want, right? Why is Europe struggling? It's like after you win, you decide you have to declare universal health care, universal child care, universal this care, universal that care, universal whatever. Like the idea that in California they're giving reparations to slaves. No one was ever a slave, and people that lived there never had slaves, and yet somehow we think we can right a wrong that took place somewhere else in the world to other people because we have infinite money. So I think that every empire collapses because people think they've been successful, so now they can expand, right? And that's the most pernicious thing at a protocol level. It's the most pernicious thing at a city. When the mayor of the city says, hey, we're going to give free needles and free healthcare and free housing and free whatever and free Uber rides and free blah, 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 we're going to raise taxes to do it. And then everyone that creates the capital leaves, and then everyone that doesn't have any that's a liability arrives, and you've swapped out your productive citizens for non-productive citizens, and the entire economy collapses.
Yep.
Right? And did it happen in Easter Island? Yeah, it happened. I mean, they thought that they could create like large stone statues. It's like, how do 40-foot high stone statues contribute to the economy of a, Pacific island where we need fish to eat, my friend? We need the wood for the canoes to catch the fish so we don't starve to death. No, we will chop them down so we can create large stone statues because the gods demand it. It's like what you have is you have a tipped power structure. And that is my way of addressing what destroys companies, Danny. It's the CEO and the management team are successful. They're like, well, we've succeeded in this, so now we can do this, and now we can do the next thing. And now that we're doing this, we're expanding into this, and we're expanding into this, and we're expanding into this, and we're expanding into that. Why? Why do we do it? Because we can. It's a Napoleonic complex. It's like I got to spread my ideology and my ideas to the frozen tundra of Russia in the winter, and I'm going to kill them if they disagree with me spreading my ideas to them because I was put on earth to do this. And so I think that my advice to any entrepreneur is focus and check your ego. And the reason I can do it is because I'm 60 years old and because I was 30 once. I was a 35-year-old successful entrepreneur once. And as soon as I was successful, I came up with 10 more ideas. And each one of them was ambitious. And I split my energies and my company's energies 10 different ways. And what you realize is it's very, very challenging to do one thing well in this world. And you shouldn't get distracted. So we're not getting distracted, right? We're focused on an idea. It's a big idea. We want to create digital credit as the base layer for digital money. And if that one idea works, that would make us the biggest company on earth. And that would make that the most successful product ever. And so humility dictates that once you come up with a good idea, you might want to focus 100% of your energy in making that idea successful. And it's cavalier it's cavalier and irresponsible to like run off and chase after the next 99 ideas, like, because you're putting at risk the important one. You're putting at risk, just like, that's why I'm a conservative defender of the protocol. I don't like big protocol, because if Bitcoin is the idea and it's already succeeding and it's going from nothing to 2 trillion to 20 trillion to 200 trillion, then don't put that at risk, right? Don't put that at risk until you have overwhelming global consensus that the thing that you're doing is necessary to de-risk it, right? And if I want to destroy a company, I just walk into the boardroom with 100 good ideas and I have them fund all of them. If I want to destroy the protocol, I just fund 100 BIP proposals with unlimited money, and I get the best engineers and I fund everything. And if you want to destroy a city, you fund every possible program. You know, we're going to clean up the environment, and we're going to give free lunches and free this and free that. And, you know, you see what happens in Minneapolis. Like, oh, we got to give like child health care and it's free and we got to do it fast. And pretty soon you find out that you're funding non-existent children. You know, like they notice, you know, there's this explosion of autism and all of these other ADHD diagnoses. Well, when the government gives you $10,000 a year for every person diagnosed with autism or ADHD, you will generate a lot more of those diagnoses. If the government's buying that diagnosis, the free market generates it. So if you decide that if you have infinite power or infinite money, if you're a politician with infinite power and you want to pursue 100 good ideas, that's what destroys the society. And if you're a businessman, a CEO, and you have infinite money and you have 100 good ideas and you pursue them, that's what destroys the company.
Yeah. So just staying laser focused. I love it. Earlier when you were talking about digital money, recently you've just started stacking dollars as well as Bitcoin. Is that with an idea of being that liquidity pool for a digital money, or is that more to try and sort of get rid of some of the nervousness around investing in the preferreds because of the interest payments?
The reason for creating a USD reserve is to improve the credit worthiness of the company in the eyes of the credit investors.
Okay.
Right? The people that are buying the credit are buying the credit because they think Bitcoin's too volatile. And they think the equity's too volatile. You see?
Yeah.
Right? And so you can do things that are good for a Bitcoin investor. Someone that wanted, if you're an equity investor, you want more Bitcoin, more volatility. But if you're a credit investor, right, you want something which is most credit worthy. So how do you improve the credit worthiness of the company? If you want to be the biggest issue of digital credit, well, those investors, they don't really have a strong view on Bitcoin one way or the other, but they don't like volatility. They don't like uncertainty, right? And right now, you're creating a credit profile in the eyes of, say, the S&P credit rating agencies, or Fitch or Moody's, or in the eyes of a very conservative credit investor. So, like, it's complicated for me to assess the statistical risk of being able to generate $800 million of cash over the next 12 months in the equity markets. But it's not complicated to assess whether or not you have $800 million of cash in the bank if you have $800 million cash, right?
Yeah.
Right? If I said to you, if your life depended on it, like, Danny, I'm going to put a gun to your head, I'm going to pull the trigger and blow your brains out if you're wrong. I have $800 million in cash in the bank and I need to pay a bill on Monday. Or I have the ability to generate $800 million of cash by selling equity. It's, there's a lot of liquidity in the market, and you have to risk your life. Which of the two trades would you weigh?
Even though I'd probably believe the equity, you're obviously picking the money.
Yeah.
Yeah.
Yeah, because what we're talking about here is the whole idea of credit is to strip the volatility and strip the risk off of the capital, right? if you're a capital investor and you have a 30-year time horizon and you have $1 million, you buy $1 million of Bitcoin, you hold it, you get 30% ARR for the rest of your life. It's a no-brainer. If you're a 3-year-old and you need $10,000 a month or X thousand dollars a month or else you starve to death and you're 3 years old, you would settle for 10%. You would settle for 10, you don't want 30%. You would take $10,000 a month or $8,000 a month on $1 million of capital. If I said, I'll give you $8,000 a month forever, and I'm going to keep, by the way, I'm going to keep 2/3 up front, but what I'm really keeping is 90% of the capital gains. If you do the math over a long period, 90% of the economic benefit goes to the company, 10% goes to the credit investor. But if your life depended upon having the money, if you were going to get thrown out of your house or your marriage was going to fail and your kids were going to, not eat, or you weren't going to pay your medical bill and you were going to die, then all of the arguments about theoretically it's better to accept the volatility,
they go out the window.
You have to accept two things if you're a capital investor. And by the way, capital investor is Bitcoin holder. Not equity investor. Equity is MSTR holder. If you're a capital investor, you have to accept volatility and duration. You're not accepting, the equity risk because you're just holding Bitcoin, but you're basically saying I'm holding it for 4 years minimum, 10 years ideally, and you're accepting 35, 45 vol. But if you're a credit investor, ideally people want 0 vol. That's the ideal product is I have $1 million, I put it into a bank and it generates $100,000 a year and I get $8,000 a month and I get it every month for the rest of my life, tax deferred ideally, but whether it's taxable or not, I just want that because that way I can buy an apartment that costs me X thousands and I can pay for healthcare and I can go to school and I can take a girl out on a date or I can buy furniture. Pay electricity, right? As I've said, the world is built on capital, but the world runs on credit, And so what's the logic of what we're doing? We're a company. What is the company's business? Like, how are we creating value? The big way we're creating value is we're creating digital credit. Who's the customer? It's not the capital investor. Not the equity investor, right? The capital investor is buying Bitcoin. They're not our customer. They're our ally. We're allies together. We're on the journey together. The credit investor is buying STRC. They want to trade at $100 and pay them a monthly dividend, and they want to know that no matter what happens to Bitcoin, no matter what happens to MSTR, they're just getting that drip, right? If the customer is happy, right? If the credit investor is happy, then we buy Bitcoin and that creates amplification for the equity, and then the equity has value. If the company can sell $10 billion of credit a year, and if we're capturing 90% of the economic benefit of the credit, okay, I just raised $10 billion, it's going to be worth $100 billion in 10 years. I just captured 90% of the benefit. I made $90 billion for the equity, right? I'm creating shareholder value by selling the credit. The equity value is the result, right?
That makes sense.
And so you're running the company for the benefit of the creditors. But it turns out that if we run the company for the benefit of the creditors, then the demand for the credit increases. And the stability of the credit increases, right? Do you want it to trade with a vol of 1 or a vol of 10 or a vol of 20? When we didn't have that USD reserve, Bitcoin crashed.
Yeah.
And STRC went from $100 down to $92. And then everybody chatters like maybe they can't pay the dividend, right? And so then we put $2.25 billion of cash on the balance sheet. And now you're like, well, for the next 3 years, they're going to pay out of the reserve even if they can't raise equity capital. So all of a sudden that strips the risk. If you strip the risk, you strip the vol. The volatility of STRC, it spiked to 19 after that crash, and now it's working its way down to like 7. It's been falling, and it should fall down to 5 or 4 or 3 or 2 or 1, right? So our operation is to strip the vol, and to strip the vol, we have to strip the risk. And to strip the risk, it means that we have to put some cash on the balance sheet. And in the near term, that's slightly dilutive to the equity. Instead of a BTC yield of 27%, you might have a BTC yield of 23%.
Yep.
But at the end of the day...
that's because you did the ATM to do it and obviously didn't buy Bitcoin.
Because we sell
dollars.
some equity and we buy cash instead of buying dollars.
Yep.
So it's near term somewhat dilutive, but on the other hand, the market was valuing us with a P to E of 1. Mm-hmm. Like they were giving us a premium of 23% against, or 25% against a BT yield of 25%. So the market gives you a P to E of 1. So the market doesn't believe you can keep doing that anyway. Okay, so you got to ask the question, well, if the company never sells any credit again for the next decade, then what's the what's the yield going to be? Well, the yield's going to 0. Mm-hmm. And so the company trades, if the company doesn't sell credit, then it doesn't matter. So what you want to do is not try to maximize the BTC yield with an expectation that it's a 1-year thing. What you want to do is create a business model where you can generate a consistent BTC yield for the equity investors for the next decade. So like, we'd be better if we generated a 10% yield every year for 10 years, then maybe get a P to E of 10, and then you trade at a premium of 100% to your NAV, you see. That's better than a BTC yield of 25% with uncertainty about how you're getting there.
Totally.
Right?
That makes sense.
Yeah, and the challenge that some of the Bitcoin treasury companies have is if you're just selling equity, there's an uncertainty about how many years you can continue to generate yield just by selling equity. Mm-hmm. Which is why you want to look at an operating model, which is, some kind of financial instrument or some model where you generate consistent yields through an operating business, an insurance business, a banking business, a derivatives business, a financial activity, a credit business, et cetera. So what we're doing is creating a digital credit vehicle, and you look at the company going into 2026, and you've got $2.25 billion of cash, you got $60 billion of capital of Bitcoin. Okay, you got $63 billion of capital. We should reasonably be able to sell a dime worth of credit for every dollar of capital. And so you have $60 billion of capital, sell $6 billion of credit a year. That's sustainable in theory in perpetuity, right? I mean, so you're really building a business where, you look to sell $6 billion of credit against $60 billion of capital, have the capital appreciate to $100 billion. The next year, sell $10 billion of credit, have the capital appreciate to 130, 140. The next year, sell $13 billion of credit. And you're like, what's your cash flow? Oh, 6 billion, 10 billion, 15 billion, 20 billion, 25 billion, 30 billion. The equity capital markets, they like a business model well understood, predictable. The credit markets, they like an issuer, highly over-capitalized, over-collateralized, and oftentimes they like third-party endorsements. The thing that we're struggling against in the credit markets is the Basel rules currently give 0 value to Bitcoin. So you could have 60 billion, they multiply by 0, and the credit rating agencies think it's worth nothing.
I see.
So getting that 0 multiplier to go to 25% or 50 or 100% is a big deal. And getting institutional adoption by the traditional credit establishment.
So that's what we need to see in 26.
Yeah, if you're making a list of like our regulatory hurdles, It was, get the insurance companies to insure us, get the accounting profession to give us fair accounting, right?
Mm-hmm.
Make sure the IRS and the Treasury doesn't unfairly tax us with CAMT. Make sure that the indexes, don't discriminate against us by not allowing us in indexes because we're digital instead of whatever, right? Get the banks to agree to bank us and extend credit, and get the regulators to allow us to take a company public, which those things we've overcome. I think that the last thing to focus upon is get the banking regulators to acknowledge digital assets as assets.
Yeah.
Right? Yeah. If someone deems you to be a non-person, it's like, okay, well, you can have 100 million voters and you all get 0 votes each. You don't really have equal participation in the society. So moving from being illegitimate assets to legitimate assets is a big deal. And believe it or not, sometimes it's a committee of like 8 people that decide to legitimize you or not.
Mm-hmm. So we need to get them on board.
Yeah.
Michael, I know you're short on time. This has been amazing. Thank you for having us here. We're in the library. I'm going to ask you a question completely on a tangent to finish. Do you have a book that you would recommend anyone to read? One that's like had a real impact on your life? It doesn't, obviously not a Bitcoin book, just anything.
I think that if you have copious free time, there are 2 histories. Either read The Story of Civilization, which is Will Durant's history, and it's like 11 volumes, maybe 12 to 15,000 pages. Start at the beginning, go to the end. Might take you a few hundred hours. You can listen to it in audio form, or you can read it. Read it if you can, because there's a lot of graphic images in it. I think that it's a balanced history of the world. I used to think it's comprehensive, and I realized, no, it's a summary of the history of the world. But compared to what you studied in school, you probably got the Cliff Notes, and this was just a intellectually responsible summary. And so I would do that, because if you read the history of the world, the Asian histories, Middle East, European histories, American histories, you'll have 1,000 examples of civilizations rising and falling, maybe 10,000 examples, and you'll see certain themes over and over again, but it will immunize you or inoculate you against falling for, the latest new idea du jour, the new thing, or faddishness. And I think that's very helpful. It gives you wisdom. And I think, and for the Bitcoin community in specific, I think it's also instructive to read Murray Rothbard's histories, right? Murray Rothbard wrote, a history of economic thought, right? Or Conceived in Liberty, all of those volumes. I think Rothbard wrote pretty comprehensive economic histories, and he tells you the history of economic intervention, political intervention, monetary intervention, and it's very helpful to read that, because I think people are manipulated by the idea du jour, and people are always they're always constructing some bromide or some simplistic idea, like, well, this represents this, or this is the first time this has happened, or this happened for the first time, and and they act like there's some righteous indignation, or like for example, 1971, we went off the gold standard. Well, let me tell you a secret. Like, we went off the gold standard 10,000 times in the history of the world. In fact, every single society, in Russia, all 200 German principalities, they all went off the gold standard, right? The example of currency debasement is as old as we have written history. If you go back and you read Rothbard's histories, what's fascinating is he points out that every 20 years or every 30 years in the Massachusetts Bay Colony from 1650 through the Revolution, some politician decided it was a good idea to print money and go fight a war and invade Canada, and they would all issue a bunch of credit, and then they would go invade Canada, they would lose, come back, and then they would default on their obligations, and they had hyperinflation. And that was 5 times in one colony. And oftentimes you'll read, people will say, like America decided to invade Canada this one time. It's like, oh, no, actually. This was an example of the first time we debased the currency. Well, in fact, every state debased the currency and the colonial government during the Revolutionary War, but it had happened 37 times before we even had a colonial government. And then it happened how many dozens of times afterwards. And so you see in these histories all these patterns, and they just echo over and over again. There's a bromide that circulates through the crypto community, like, oh yeah, the Reformation, that was a separation of church and state, and we're the separation of money and state. The Reformation was not the separation of church and state. If you actually study it close enough, what you realize is that Martin Luther was a monk that came up with the idea that maybe the German princes could just keep their money and steal all of the property from the Roman princes. It's like what it represented was the combination of church with the state of Germany, with the northern German state. And the German princes realized that if they were going to seize the property that the church held in Germany, they needed God to endorse it. And so they needed God to speak German. And so they took a German monk who created a Lutheran faith. They adopted the Lutheran faith. They excommunicated the Roman Pope. And instead of 1/3 of all the property in Germany being held by the Roman Catholic Church, it was now held by the German Protestant Church. And instead of 10% of all the money going as tithes to Rome, the 10% of the money terminated back in Germany. And so it was literally just the use of a religious mechanism for political power to redirect economic power. And there was never a separation of church and state. The church has always been aligned with the state. It turns out that the French Catholic Church terminated with the King of France. The Spanish Catholic Church terminated with the King of Spain. The Roman Catholic Church terminated in Rome. There was a Venetian Catholic Church that terminated with the Doge of Venice. And if you think that somehow the Protestant Reformation was a reformation, then explain how come the Protestants in Switzerland became Calvinist? Because they wanted to terminate all the money and all the power in Switzerland. And then the Protestants in Scotland, Presbyterians, they wanted to terminate the money and the power in Scotland. And then the Protestants in the UK, Anglicans, they wanted to terminate the money and the power with the King of England. And then you had the Puritans and the Baptists and the Anabaptists. And you know what Southern Baptists are? The Southern Baptists formed because there was a civil war and we couldn't very well have all the money and the power terminate with a Northerner. So we needed to split. And so you have continual examples of a political struggle, which was also an economic struggle. And people frame things as this is a religious fight. Well, it's a religious fight. I mean, the whole term barbarian, we killed them because they were barbarians. They engaged in barbaric activity. Barbarian just means I speak a different language. It's just I'm an other. Okay, if I want to kill someone, it's convenient for me if they don't speak my language because I can say that they're barbaric, and barbaric means they're Satan worshiping, child sacrificing, barbarians. They're not there to defend themselves, and they can't because they don't know what I said because they don't speak the language I just said it in. And the joke is the Greeks came up with that idea. So in essence, it gives you God's permission to murder someone that lives across the river and take their stuff. Right? And this entire idea, these things that echo through history, I'm combining religion with politics, with economics, with money, and these are all justifications for me to accumulate power, seize power. If I need to undo the power of a Roman Pope, I very well better create the Anglican Church, right? and say that God spoke directly to me. Right? And that kind of was the basis of the Lutheran idea, which is God is German, God spoke to me, and he told good Germans that the Roman Catholic, papist is not his spokesperson on earth anymore. So I think when you see that, you see that every one of these things, they're not new. 1971 wasn't special. Will Durant literally has a line, he's talking about a Russian czar, 16th century, and he goes, the Russian czar debased the currency and it all became worthless, and people discovered that the last thing in the world that you want to save is money, or whatever. It's like, and he's talking about something 500 years ago in a culture you've never heard of, and it was like just the 19th time it had happened in the Russian culture. So all of these things are echoing, right? And oftentimes, one of the most interesting insights that comes out of Rothbard's work and Conceived in Liberty is the colonies before the Revolutionary War were decentralized, and the reason that you had any virtue at all was because when the governor of New York dictated, or when the governor of New York said you can't own property and you have no economic rights and you can't operate a business, people could get in a canoe and cross the river and go to New Jersey or Pennsylvania where they might have a chance. And when all the governors went insane. They were all insane autocrats. But when all of the governors and all of the colonies had all these autocratic rules, like, it's illegal to bake bread, or it's illegal to make a hat. There's literally like the friend of the governor is the only guy that can make hats in New York. They had the most insane communist, authoritarian, socialist rules. When they all went insane, you could just sort of go west, and your competition was a set of Neolithic Stone Age tribes, and then you could do what you want, and you get to bake bread and make your own hats, and you get to
lavish.
And now here's the big reveal, which is we're taught in school that somehow the Revolutionary War was the colonists standing up against tyranny, and that the job wasn't done until we formed the Constitution and created the United States. But what you really realize is we probably were at the ideal point when there were just a bunch of colonies and there was no United States, because the United States was a power grab because a bunch of federalists and centralized businessmen wanted to find a way to annex hundreds of thousands of acres in Ohio, and they needed a federal government to give them title to the millions of acres west of the colonies. And so they needed to go to the government. So we created a federal government. They could actually buy 1 million acres, and they could show up in the 1 million acres and kick off all the homesteaders and say, we have a title from the federal government of the United States. You owe us taxes, or we own your land. And so all of these political formations, they've always been about balance of power and property rights and the denial of property rights. And what you were taught, that was the separation of church and state, is exactly the opposite of what literally happened. And what you were taught was, we formed the great nation, to preserve people's rights. It was exactly the opposite of what happened to a lot of people. A lot of people lost their rights, and once you understand that, it'll keep you from being a simplistic idealist, and you realize that there's a continual power struggle in nature, in life, in history, never ending, right? Everything in history, it's a continual, never ending power struggle over money, over power, over property. And if I want to murder half of the nation and steal all their property, generally the best way to do it is say God said it was okay. And so people go, well, we've been mired in religious wars forever. Isn't that a tragedy? We created the religious differences to justify the war. And once you understand that the religious differences were inevitable because they're all part of the power struggle between one party and another party, then I think it helps you to understand why the world is the way it is and why these power struggles will continue.
All about money and power. Well, it sounds like I've got a couple of 100 hours of reading to do because I was not aware of any of that. But thank you so much, Michael. This has been great. Hope to do it again at some point, but thank you.
Yeah, anytime.